We had an absolutely insane week last week. We saw a VIX spike to almost 29, a ton of put flow, as you can see here on Cheddar Flow. And on top of that, a lot of volume on SPY. You can see the volume bar here in comparison to other days, just way more than we've been seeing for quite a while now. So a lot to talk about in this video today. And of course, the major culprit of all of this was Silicon Valley Bank and that entire fiasco. So I do want to preface this video. There's suddenly a lot of fear in the market. And as we've seen in the past, whenever there's a lot of sudden fear in the market and we see some form of a sell-off, the market likes to cool off eventually. And just based on a simple SPX chart over here, I guess you guys might laugh because I always get comments about my charts looking complex, maybe simple to me, but I try my best to explain it in the most simple way as possible. But as you can see here, we are right within my demand range box, first of all, and second of all, we are touching right about this downward trend line. And this downward trend line, of course, goes to the all-time high level. Reference this every single video so far just because it is a major trend line. And the big thing about this line is we are right on it right now. We're sitting on this line and a part of this demand zone. Plus, we are at oversold conditions. And on top of that, there is a ton of fear in the market. Like, look over here just on TradingView, a Wall Street fear gauge options volume jumps to 4-year high. A lot of this is just about fear in the markets. You could see it all over just Twitter in general and a lot of the news articles that are out there. And in the past, if you see stuff like that, typically means there's going to be some form of reversal after. This setup that we had from the past week was amazing, major downside. If you remember the video from last Sunday, I talked about this being very similar, these 3 days that I'm highlighting right now, very similar to what we saw back here during the 4 days that we had up. And it did end up manifesting itself in price that we fell lower off of it, similarly to what we saw last time over here. So that worked out very well. And we did see a lot of downside, and we will see more and more downside as the weeks go by. However, again, I need to preface the video. There is a potential that we do see some form of a short-term reversal to the upside. You do not want to go short in the hole at any time in the market. That's just not good risk reward practice. But two, especially throughout this week, if you do see some form of a bounce around these levels, like there's a good potential that we do see, then don't just think, oh, we're going to bounce off of this and continue up a lot higher, because a lot of people get carried away with price. As we saw from back here, people were going long again, thinking that we'd make a new high of the move and pass by this like 4,200 range that we topped out on just during this 2 to 3 day span. And look what happened here. Hard rejection off of my supply zone. I was talking about it being bearish off of here, and then just a lot of downside afterwards. And the technicals were pointing to a short setup, and then we saw fundamentals align with the technicals back here on Thursday of last week, and we just saw a major dump off of that. So very nice short setup on there. Again, more to come to the downside. I still am macro bearish. However, we do need to be careful with a retest of this range. Technically speaking, this is due for a bounce off of here, whether it happens Monday or a little bit later in the week. Now, one thing I do want to note, I referenced one of my reversal date methods in previous videos. The last time I referenced it was back here this week. It was Wednesday, February 15th. And you can see over here, we had a major reversal off this 18-day cycle. This is a cycle, one of the most basic cycles I use. And I shared this one publicly. Again, I can't share many of my cycles publicly because they will cease to work if too many people understand them. I decided to show this one. It has tremendous success in the past. As you can see from back here, we had downside momentum going into the date, which means if you have downside momentum going into a reversal date, it will go up afterwards, or is very likely to, at least probability means it's more likely to. We made bottom over here, December 22nd on this date. We made a bottom. These can sometimes be plus or minus 1 day. So we made a bottom the day after this one hit, and then continued up to the upside afterwards. You can see all the way back during this major rally that I referenced early in the video, we had a major top that formed off of this rally and continued down after. So this reversal worked. It even caught the top that we made on August 16th. So this cycle is very successful. Again, try and keep it under the radar. I don't post about it too much other than just in this video, which I'm sharing with you guys for being subscribed to the channel, which if you are new, then do subscribe. But as you can see here, we have one that is due for Monday of this week. I also have another one that converges on March 14th, which unfortunately I won't be able to share in this video. But again, that's two major cycles that are converging early this week. And we also have CPI on top of that. So first of all, going to be a lot more volatility to come, kind of like what we saw from the past week. But also this gives a chance for a relief bounce off of this level. Again, very critical retest. This is the first major retest of that downward trend line, the gray one right here. And of course, the one I showed you over here, the yellow one on SPX. So this is a big deal that we are retesting it right now. Just be aware of this scenario of a potential bounce off here. Again, a lot more lower lows to be met from this entire range right now. But in the near term, do be careful of some form of a bounce off of that. And on top of that, as you can see from this past week, a lot of puts hit the tape, a lot of protection coming into the market. So the longer term seems to just be consistent with that bearish thesis. We've seen a lot of these June plus puts, as you can see right here, being the majority bearish, even some closer term now like April as well as March for that protection that people were trying to buy from the past week. And then also people trying to catch that lower end for a move upward. We saw these 313s. This is for the Monday expiration for 1.0 million for those calls. Again, later on in the day, we saw those calls as well for those out the money, trying to catch a bounce. And a lot of these calls seem to be within a month expiration. So again, short term potential bounce with longer term remaining in that bearish standpoint. So something to note. One big thing to note though is the dark pool levels. We saw 3.9 billion worth of premium at the 391.61 level. This is very uncommon. Remember, over 3 billion is a lot. Almost 4 billion, very uncommon to see something like that. It takes typically multiple months before you see a 4 billion plus print in the market. So not that common to see something like this. Do note this level. Again, we are below it as of now. We closed, as you can see up here, at 385.88 on SPY. But again, if there is some form of relief bounce, this could be a level that acts as a resistance range for potential rejection off of that. So again, mark this level on your charts. We didn't actually see that much activity throughout the week other than on Friday, which is surprising. You can see here on Thursday, we only had about 700 million in premium, so not that much. And then same thing on Wednesday, not that much as well. We had only 600 million on that day, so just not that much overall. But again, Friday, major print, so do watch that, and we'll see if there's any continuation around these levels as we start off this week, let's say Monday and Tuesday, which again, we do have CPI on Tuesday, so do make sure you're aware of that. That will have a lot of volatility as people try to predict what the Fed will do because of the CPI report, if it's hot or cool, but should be a very exciting week for sure. And another thing I do want to note is Bitcoin here. Bitcoin has started to bounce a bit, as you can see from the past 2 days, which actually solidifies a further thesis of a short-term bounce here on the market. On top of the other variables I showed you before, whether it be the reversal date or the fact that we're retesting a key demand range and also that trend line, we also are seeing Bitcoin bounce. And Bitcoin is a very good indicator of liquidity in the market and as well as short covering flows. We saw a major short covering rally back here, which also tech followed. Majority tech, the market did, but of course tech was one of the major culprits of that short covering rally. Remember, tech was very beaten down from the past year, and we saw this spike as well in Bitcoin because tech and Bitcoin can be very speculative assets, or at least include those as a portion of it. We have started to bounce throughout this weekend, so this is something to note as well for that potential bounce theory. We saw a gap down, let's say on SPX to start off the week. Do be very careful on that. You, again, don't want to shorten the hole because there's a potential that it bounces off of that. But this is only for this week. Again, near term, there's a possibility of that bounce with the longer term definitely being to that downside as we will see a lot of this market weakness manifest itself in price very soon. And this is, I like to say, this is only the appetizer of what will happen eventually. So we will see more of that in the next coming weeks / months. But on top of that, I do want to also reference the dollar, as I always do each week. Dollar has seen a big spike from this past week, but then it fell down quite a bit to finish off the week because we saw that market weakness. Dollar also saw weakness at the same time, which is actually pretty odd because typically the dollar strength will promote more market weakness, but the dollar actually fell over here, which typically is a sign for a bid in the market. Again, there were extraneous variables like the Silicon Valley Bank problem that ended up hurting the market more. As you can see here, we just barely held on to my demand zone right here on this 104 mid level. So it was able to hold at least on the candle, but the weekly candle did not look the best overall. Again, we had that major break above, but this is not a good candle, at least for further upside in the dollar, which does again support that further bounce thesis for a short-term bounce for the markets, because again, when we see the dollar weakness, then that can help aid the market catch a bid, especially the Dow, which has been really beaten down as of lately. I do want to show you the Dow as the last thing here in today's video. As you can see over here, we did this weekly candle, first of all, very bearish, but if you look at the daily chart, it shows us a little bit different of a picture. We are right within this purple box, which is the downward trend line, convergence of price and downward trend line here. Remember, every major index has these downward trend lines from this past year because of the bear market. And on top here, you can drag it across to the previous resistance that it has made. And as you can see, we did have a little bit of a bounce on Friday off of this test. This is now the second time that we've retested this downward trend line. We tested it all the way back here, end of 2022. So second time will likely not be as strong of a retest as the first one, but still a retest nonetheless. So you do have to be careful again of a bounce off of this. One thing to note is once we do break below, finally, below this level, which I suspect will happen at some point within the next month or two. Once we break below this, especially on the weekly close, that is when downside really starts to accelerate, because all of this up here is a fake breakout, which means that it's very likely, just technically speaking, we will see new lows in the Dow. And of course, if the Dow is going to see new lows, then we are going to see a lot more weakness in the rest of the market, whether it be the Qs as well as SPY. So definitely watch this, because this can give us a lot of insight on when selling will accelerate even more than what we've seen so far. But at the moment, still potential for a form of a bounce off of here. And one last thing today to keep in mind, kind of going off of that Dow Jones analysis I just gave, we do have a critical line on IWM that starts at the 2020 low. And if you scroll in here, you can see we actually found a support here on IWM on Friday right off of this line, converges with the lows we made back here in September/October 2022, as well as in late December. And over here, you can see we did retest it. So this, with the Dow Jones, we break below it, especially with a weekly close confirmation, that will signal a lot more downside. But until then, this is still acting as a form of support. This is the third, or about fourth, you could argue, time that we have tested this as a support. So right now we are bound between this downward trend line as well as this trend line from over here. So do know that as well. This is the major indexes, because they all converge with each other. Weakness in one will definitely hurt the others. And other than that, though, excited for this week. Was exciting last week, especially with that downside. More to come in the future, but do be careful for a bounce this week, and I'll see you guys next time.